Well, good evening, everybody. This is Jeff Scott, and it's late Sunday night, early Monday. As you can see on the screen, it looks like it's 12:02, and actually hope this doesn't cause problems. I'm going to bring my resolution down a little bit because I want you to be able to read this on your monitors. So I'm going to bring it down today to, let's say, how about 1920 by 1080. Apply. I don't think it'll cause. Keep these changes. Okay. All right. Excellent. And if it does, then I will deal with it. Actually, what I might do is stop the recording and then restart it. Let me do that. Okay. Well, let's try this again. Hi, everybody. This is Jeff Scott. Welcome to this weekend's review. It's a little bit past midnight on Sunday night, and I am actually doing this one back in Columbus, where I'll be for a period of time. Although I still like to see my view of New York City. Hope everybody's had a wonderful New Year. Guess this is not the year-end review. Sorry about that. But let's go ahead and give you an update of where we are in what I will describe as a very overbought market, and one that is begging, to my mind, for a correction, although these things have a tendency to go longer than you think they should go. For those who've not been here before, this will probably be, I'm going to try to keep this to about 40 minutes tonight. It'll be my top-down approach to the market, predominantly using highgrowstockinvestor.com, HGSI as I refer to it, but also using some of the other toys that I have. Email address is there. Feel free to reach out to me by email. This is for educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker, and I'm not affiliated with any software vendor or trading company. Anything I use are things that I have paid for myself. I use them in my daily trading, and I try and give an unbiased view of what I think about the different tools that I have and where I find the value in them. I pulled this from the thing that I did live on New Year's Day. I don't think we're out of the woods yet. I think anybody that watches CNBC or any of the other news rags during the day probably would agree with me. This debt ceiling may be the big one. And I put this slide here about with Obamacare because there's going to be 30 million lives covered that haven't been covered before. Who's going to pay for them? And we know the answer there. The Fed keeps printing or spending an extra $1 trillion a year that we don't have to prop up the economy and pay for things like Obamacare. How long can that go on before we have some real issues? I use a lot of different tools tonight. I'm going to probably look at TradeStation, maybe Thinkorswim. I clearly will spend most of my time in High Growth Stock Investor. I want to show you one picture in EdgeRater, which I think is very important tonight, and I'll mention Woodward and Brown. I use lots of different, I have had lots of different influences, both the luxury of live programs with Ian and Ron, the gurus of high growth stock investing, a number of live webinars and some live meetings with Alexander Elder, mostly reading his books. Had the opportunity to break bread and also sit through several meetings with Gil Morales and Chris Katcher, the O'Neill disciples, with their pocket pivots and Bible gap-ups. I've learned candlesticks by spending time listening to Stephen Bigelow, among others. David Elliott was another one that I felt was a great teacher, and I learned a lot from him. Unfortunately, he passed away last year. Ron Bronke has some interesting books about taking money out of the market and writing calls and naked puts, and Van Tharp, money management, position sizing. So what I talk to you, and you'll hear trains in the background, I apologize, when you live downtown in Columbus, you get them all night long. What I do, I've learned on my own. I've gone to a lot of classes, I've read a lot of books, but my style had to come from somewhere, and I think you'll see bits and pieces of these folks in there. I talk about stocks I might want to buy or sell. I have no idea what I'm going to do tomorrow, and I put this in here just to reiterate that if I say something's a buy, it means it looks interesting. It means I put it in a list. I run a number of automation programs on that list. I hope in a few days or a few weeks to demonstrate some really exciting tools of using trading directly from radar screen, frankly, in TradeStation that I will be beta testing. But I use some tools from marketgauge.com, Never Lost Trading, and others to help automate some of my trading. But basically, the way I do this is, although I'm going to talk today from a top-down perspective, on the weekend I flip it and go bottoms up as well. And I start with a list of about 800 fundamentally strong stocks, and I go through charts. I try and get a sense of what the market is doing. I try and find some interesting stocks. I also do top-down, and during the week I spend more of my time top-down investing. It's a lot quicker for me. But I try and marry the best of looking from a top-down perspective of what's going on in the market with getting a broad-based feel by looking at hundreds of charts. And I also, I guess, have no life because I actually find looking at charts to be exciting. Here's the typical agenda. We'll definitely do the market update and the top-down investing approach and probably the shortcuts. And on the right-hand side will basically depend on how time goes and what comes up in my discussion. Ian and Ron, Ian on the left, Ron, I've learned a ton from them. I will mention them constantly. If you've never been to their live meeting, it's the best investment you'll ever make. The next one I think is like March 24th. I have to update the slide. If you go to the website, highgrowthstock.com, which I'll show you in a second, you could actually find some neat things there that you might find useful. Here is the link for highgrowthstock.com, and basically if you go to it, wow, that was kind of cool. And what you will see is this screen and begin a free 30-day trial, so you can get a free trial including data with no credit card. Ron Brown puts out what he calls weekly reports. I haven't looked at this one, so if it seems similar to his, it's because we think alike sometimes, which you can download. They come out intermittently, although he's picked up the speed there. I have a section, my weekend reviews as well, where you can download these in their entirety, see some of the back ones as well. Also, Ian Woodward has a blog. Everything I'm showing you thus far, except for including the trial, are free. Ian is just outstanding, and he picks up the pace when he thinks the market is going to be changing. And then if you have the product, or even if you don't, go into Support Learning Center, and you could see, oh my God, a lot of my name. I've been doing this for a while. You might be able to tell that. But more importantly, other smart people like Dave Steckler. Ian and Ron did a series on some of their indicators. Then some of the other users, Paul, Ray, and David, have done a number of things. So a lot of things that you can do to get help, and so I'm not going to go through the basics, although I have a tendency sometimes to jump into my PowerPoint for completeness sake. So to me, the most important question is, what is the market likely to do this week? And I don't have a crystal ball. I can only look a little bit in the back in my rear view mirror, see what it's done, look at the charts, and get an idea of how it sits compared to other times and what the likely response is going to be. I like to start with how it's done. So I do a thing called a group performance analysis. And I mentioned I start with 800 or so stocks. I put them in a number of different user groups. And I have this data going back for probably 5 years. In fact, on my New Year's broadcast, I actually looked at some of my back data and proved the principle that strong stocks from last year are more likely to do better this year than weak stocks from last year, sort of going against some of the Dow theory, or excuse me, the dogs of the Dow theory. So a couple things I look at. This is from the close price on Friday of the 28th to the closing price on Friday the 4th. This is an automated maneuver using HGSI. And the first thing you notice is there is no red. These are all long groups, although some of the groups I picked I had thought were bearish looking, and had the market rolled over, they would have been some of my choices to start fishing for shorts. But every group here assumed that I bought $5,000 positions in each stock on Monday morning, and I was able to buy it at the price that closed on Friday, and then it gives me an idea of how the different stocks performed over the week. Now, if you've been here before, you know I like to start and see how I did, and I was a market maker last week. Now, it's not a big shocker, and you know what? I'll take 4.57%, which was not a great return last week, although there were plenty of lists like the Big Cap 20 from IBD that did below that. Interestingly, the pocket pivots from Friday last week did half of that. Perhaps they were digesting some of their gains. Now, when it says my current holdings, what that means is on Friday in my various accounts, some hedged, some non-hedged, I had 52 different holdings. That's a gigantic number. I don't recommend it, but it's something that I've done. I manage a lot of different accounts with my money, and it just adds up to a lot of positions. I actually think you can handle more than 20 versus the old days when you did it with paper and didn't have the tools that you have today, but I recognize I have too many. Now, part of why I have so many is there's a lot of hedges that I have in there, and I think my return was actually reduced from what it would have been because of some of my hedging, but that's okay because what I think is going to happen Monday and this week might actually make those hedges look smart. So no complaints from my perspective here. Again, a hedged portfolio to be identical to S&P 500, I'll take it. The big stars, the IBD 50 and the HGS 100, which are not hedged, were about a half a point or 3/4 of a point higher than the S&P 500. So we know our stocks are working, growth stocks are working. Market Smith 250, 5.04. What was the big stars? Breakouts. So these were stocks that I identified. There weren't many there, but stocks that have broken through resistance with great earnings per share growth. Here's a second breakout. This comes out of OmniTrader as a list that of its choices from a breakout scan that I do. So breakouts won, pullbacks waiting for signals won, which meant these are stocks that pull back to resistance, or excuse me, to support, and are looking for a reason to go up, such as a kahuna, volume coming in, a pocket pivot, so they performed well. Top relative strength stocks performed well. Top stocks from the smart groups, which I'll talk about later, which is a very easy way of making picks without doing a lot of works. Interestingly, red candle highs on Thursday, which would typically be a very bearish candlestick formation. If the market goes down, well, the market went up, and for the week, they were up 6.18. Now, these were red candle highs this Thursday, so they probably are not something that's reasonable to guess because I'm looking at how they got to the red candle, so I probably should not include those. But last week, on my green candle low scan, these are stocks picked based upon Friday's close, 38-1 up to down, and a gain of 6.16. So I would eliminate this Thursday because those are things that we picked on Thursday, and by definition, they had to be at a week-long high. So I think you really can only look at the green candle lows because they've pulled back from Sunday or Monday, and the red candle highs probably have to be looked at, the Sunday red candle highs, to get anywhere because, again, by definition, a red candle high had to take out the high of the last 10 days. Now, the red candle highs from Sunday were up 18-1, so they performed strongly. Everything worked well this week. Last week, I said several times that it was junk off the bottom. This is a little different feel. Now, that might be interesting. You know, I don't like seeing bearish scans up at the top, but bottom line is, great week to be owning growth stocks. Now, you might say, but Jeffrey, what if you looked at from the open Monday, because I can't buy it at Friday's close? And you'll see it's very similar, where the open, 4.5, I was at 4.77, so the same. IBD 50, 5.4, HGS 100, 5.56. So there wasn't a big difference. That tells me that although in individual stocks we have been some big gaps and some exciting stuff on Monday, for the most part, looking at Friday to Friday is probably still the fairest way to look at things. Now, if the market is extended, then I'd expect to see it on charts, and I'd expect to see it on some of the intra-market types of numbers. So in EdgeRater, I can look at where stocks fall within their Bollinger Bands. So I keep meaning to look at this. I believe the Bollinger Bands captured 90% of the time of a stock. So 90 or 95% of the stock's movement should be within the upper and lower bands. which means only 5% should be above the upper band and 5% should be below the lower band. And so if the stock gets above the upper band, it's very overbought. If it gets below the lower band, it's very oversold, and they have a tendency to snap back. We are at snapback time, folks. 92% of the stocks in the S&P 1500 were trading above the midline of their Bollinger Bands. That itself is a big number and a little scary, but it's not the reason why I think we're due a big snapback. 35% of the stocks were trading above their upper band. Now, they don't last there long. They snap back, and when those stocks snap back, it's going to pull down the indices. If you take those that were at 80 to 90, 90 to 100, and above 100, and you add them together, you've got over 70% of the stocks that are trading close to the top or outside their upper band. That's a signal that we're going to see the market pull back. Now, can this get bigger and bigger and bigger? Absolutely. And as it gets bigger and bigger and bigger, it increases the likelihood of a snapback or a pullback of the market. Now, what's hard for me to believe is if I go back, this was Thursday, so looks worse, but if you look there, it's only a little bit above 25%, so the number of extended stocks increased. Thursday, Wednesday, you could see a lot of stocks were, and we still grew. So the market can continue to go up despite these numbers. And then I flip it. Here is the 31st, which is Monday, and here's the 28th, which was Friday. So in 1 week's time, we've gone from 40% to over 90% above the midline, and we've gone from almost nobody in the top 10 or 20, the top 2 deciles, to a lot of stocks. So this is clearly a market that is overbought and one that says it's going to come back. Now, the question is when, and no one knows. It may get more and more extended before it comes back. We can see right now the futures are leaning to the negative. Big deal. It's early in the evening, and after last week's run-up, what would not be a big surprise. So looking at where we came from, we've had a big run-up very quickly. We have internals, at least from the Bollinger Bands, that says that the market is probably at a point where we need to be a little bit aware, maybe not nervous, but at least aware. And let's look at some of the other internals. This is the S&P 1500. I like to use this. Well, first of all, I learned this from Ron Brown's and Rian, so I don't ever want to forget them. I like to look at this because the S&P 1500 is a broad-based market index. It gives me the 500, which are big, the 400, which are medium, and the 600, which are small. It gives me volume as well. So what we're going to look here is really the top 2 panes. We know from accumulation, we divide it up into 5 groups, A, B, C, D, and E. That D and E are distributing, A and B are accumulating, and C is neutral. So we are starting to get to the extremes. So this is as high as accumulation has gotten in the past. And if you look at what happens when you get to this point, you start to see pullbacks. And so we are at peak accumulation. In fact, we are as high as it gets. So by the number of stocks that are A and B accumulation, we are getting to a point where one might expect it's time to pay the piper and pull back. Now let's see if I can pull in some more time, and you could see going back. Well, I'd have to reset some of the parameters to go back further, but again, peaks lead to pullbacks. Peaks lead to pullbacks, and we are clearly peaking. So one thing to be concerned about is how much longer can we go? We're already extended from an A and B perspective. There's a number of things here, new high, new lows on the HGSI indexes, and you could see the new highs are, the new high versus lows continue to go up. That is certainly bullish in the market, and it's above its moving average. One thing I like to do is look at how the index breaks down and compares to the stocks compared to those, the 20, the 30, the 50, and the 200-day moving average. So what you're looking at here are the percentage of the index in blue and the moving average of the index in red. And what I want to see is, in a bull market, you expect to see that the percent of the index trading above a moving average is above its moving average. Okay, so this shows that the moving average of stocks above the 20-day moving average is pretty high, but the actual number today are higher than that. So when the market pulls back, stocks get below their moving averages. And when you look at an individual stock looking for a bull or bear stock, a bullish stock is above the 17, the 50, and the 200. You could see here that we're above on the 30-day. Look how many of the stocks are above their 50-day compared to their moving average. And then here is above the 200. Now, one thing that you can do is go back in time and start to look at the extent or the number of stocks trading above their 20, 50, 200, and 30-day moving average and get the sense whether or not this is a market that is extended, and we're getting to those points now. Down here, you can look at candlesticks of the S&P 1500, and I just want to point out that no shocker with what I showed you before, we are right at the top of the Bollinger Band. Now, Bollinger Bands are determined by volatility, and they get narrow at times of less volatility. They get broader as volatility increases. You can see they're broadening here. But look at how the index trades within the Bollinger Bands. And we are essentially trading above the top of the Bollinger Band. Laws of gravity and history say to me that we're likely to pull back into those Bollinger Bands. So I am looking, expecting to get a pullback. Now, I don't know when that pullback's going to come. And, I said that the market goes and runs 30%, and I look like an idiot. But I just think that we need a pause to refresh here. Now, we don't necessarily need to have a dramatic pullback. What we need to see probably is some digestion of these gains at the minimum, which means sideways. And what happens when you go sideways? You take out some of that excess, and those moving averages have a chance to pull up to where you're at in the stock price. So I think you're probably getting the sense of what my thoughts are, and we've now been in this about 15, 18 minutes, and it's going to, I don't want to do this all night. I want to get you some valuable information and get off. So in my top-down approach, and I'm going to pick it up here, I like to go down to Woodward and Brown user groups and look at Major Markets Plus, top-down investing, so I can see over the last 2 to 3 weeks with an emphasis on the last week, where has the leadership come from? Small caps continue to be the leaders. Gold and volatility have been trashed. Volatility had a quick run, and it just got murdered this week, which means VIX, TVIX, UVXY had a very tough week. Dollar sort of in the middle, but let's just take a look at a couple of things. Let's look at what a strong index, the small cap index looks like. And let me go down to one of my traditional views, and here it is. So a couple of things. For those that have been here before, you know that I use Bongo, which is a proprietary indicator that I was involved in creating. A long and a short pullbacks are what I look for, which means the long green and the short one goes red. Ignore that one. So this is a pullback here. You see the long Bongo is green, and you see a pullback here in red, and then a buying opportunity comes into this, in this case, the indice. Force index, I use the same way. Both of these are momentum indicators, the long and the short. This in the middle is accumulation and distribution. You can see everything is green here on the small cap 600. This is the high jump. The high jump plots the distance between closing price and the 17, the 50, and the 200-day moving average. This is Ian's secret weapon of finding when it's time to pull to get out of a stock or to get a pullback. And when it gets to the highest it's been over a period of time, it tells you that it's time to start worrying about a pullback. So you could see when I go back to the beginning of the year, here was the high and a pullback. Here was another high and a pullback. We're kind of there right now. It's not the highest high, but we're at a point where in the past the stock market pulls back. So it means we're extended from that 200-day moving average. And then another thing that you can do with the tool is just connect the bottom here, which is close, to the top. And you could see in 32 periods it's run up 15%. It's correction time. And when it happens, it happens. I don't know when it will happen, but it means I'm tightening up my stops, I'm buying protection, I'm getting out of margin because I want to keep my powder dry so that if I get a profound pullback, I have money left that I can live to fight again and also have a chance to participate in the next 15% run over 32 days. Now, saying that, I'm not closing out all my long positions. I'm getting more balanced and more hedged because I think this still, it'll run until it stops running. Let's take a look at some of the others. So that's strength, small cap 600. NYSE will look a lot like that because it's a mixture of about 4,500 stocks, many of which are small. We see a similar thing in getting near the top of the high jump bar. Down here you see a green thing, that's called a eureka. And that eureka signals in HGSI land when there's tons of exuberance coming in, sort of our version of the O'Neill follow-through day. And you can see that we had a eureka back on, I guess that will be Monday. In addition, these are kahunas, which are big moves in the Bollinger Bands. The darker the blue, the more impressive. So lots of momentum indicators supporting that this is a big move here. And you see in blue and pink, Catcher and Morales' pocket pivots. So if you can't tell, there's momentum pictures there. I'm looking for stocks that pull back, that have momentum changes. Those are what I like to jump on. Take a look. So that it was the NYSE. Let's look at what's not going to be as pretty. Let's take a look at the let's look at the S&P 500, which actually, as you could see, had pulled back. We didn't see this in the small stocks, and now it's up nicely. And just out of curiosity, from where it was to where it is in 32 days, it's up 9%. So it's lagging, although it's had a very nice move. And you'll notice all these indices have changed where their price is above the 8-day exponential, the 17-day simple, the 50-day simple, and the 200-day simple. Lastly, let's take a look at the NASDAQ. And the NASDAQ looks a little bit like the last. It's gotten above its indices. A lot of gaps have come in over the last couple of days, and the market's been gapping a lot. And it, too, has had a very nice run over a relatively short period of time, 32 periods, about 10%. So there's no dogs here, but clearly the small cap stocks have been leading. What's been the dog? Volatility. It sticks its head up like the whack-a-mole, and it gets whacked back down. It's at a point now where, what does it do? It bounces. So I would be looking for volatility coming in, again, consistent with a market that's extended and potential for some pullbacks. But timing is everything. Gold got whacked as well last week, now trading below the 200-day moving average. When the Fed said they may stop putting in liquidity or change their liquidity amount, you saw a deep pullback in gold, and then a little bit, there's a green candle low here, so it's not real long. Yeah, it's the lowest low in 10 days. It's a green candle. That could be a reversal sign for gold, but right now gold is looking very bearish. The dollar, it fell when there was a lot of bullish enthusiasm earlier in the with the actually it popped up actually this week with the bullish enthusiasm coming in from doing the deal, and which is kind of interesting because over the last couple of years, a rising dollar has not been associated with a falling market. I guess happiness would be getting to a period of time of prosperity where the dollar gets stronger and our stocks do well because of earnings. The dollar has had a tendency to stall out at the 200-day moving average, both above and then below, and so it's about 20 cents below the 200-day moving average. It'd be interesting to see if the dollar moves back up or is it risk on this week, and the euro going above it. So market, extremely powerful move last week, extremely strong, very bullish charts, but the reality is too much too fast. I think any way I look at it, high jump, accumulation, distribution, how much of a move in a short period of time. Everybody being up last year 4.5% for the S&P 500 in 1 week, and everything up last week, not last year. You know, January's been a good year already. And maybe we look back at this year, we would have wished we had a 4.5% gain. So I'm a little nervous based upon at some point we're going to have a pullback. Let's now in the second part. So what does that tell you and tell me? It tells me that I'm going to be careful with my longs this week. Doesn't mean I'm going to get out of them. Tighten stops, as I said before. Be a little bit leery, but markets, you think about that train, and the train wants to stop and turn around. It's got a lot of momentum. It takes time for it to stop. So we may continue to go up before we hit that point. So I'm not saying jump out of your windows and sell everything, but I'm saying that we're probably getting at a point where we want to think about what are we going to do when we get a sell signal. So 145 industry groups, this is the T1, which I'm going to get out of in a second, showing what's been working over the last several weeks. A couple of things just looking at this. When I did my bottoms-up review, I saw a lot of energy, including gas and drilling, which I had not seen in a long time. I saw home building and home building spin-offs, which we continue to see. But energy has really showed up on my list where they've been quiet for months. So Lou pointed out a couple on Tuesday's webinar, but something's going on with energy as well. In fact, well, we'll look at my buy list in a few minutes. So people know that I don't want to look at what was moving 3 weeks ago. I want to know what's moving now. So I'm going to go to a 2-day force. So that 145 will turn out to be 89. So that's a little bit lower than it was Tuesday. But the majority of the groups are moving up. And force index, for those that don't know, this is Alexander Elder's, one of his contributions to my learnings. It looks at volume times the change. So if the stock traded up, the force for that day is positive. Stock traded down, it's negative. It puts a 2-day exponential and a 13-day exponential. So what moves force? The price is the direction. The volume really is the determinant of how big the force is. Everything we do is a derivative of price and volume, so this is perfect to look at. So things that have huge volume, like major money center banks, are always at the top of their group, and we'll probably see some of that as we go through. So I swear I hadn't looked at this yet, so this will sound too funny. Up at the top are diversified financial services, so you'll see those banks in a second. Oil, gas exploration, biotech, airlines. Boy, this is HGS, high growth stock investor dream groups. So what I like to do is I like to go very quickly through the top 5 to 10 of them, probably look at home building as well, and then we'll look to the other side. So by right-clicking, change index group, I see the stocks in the group that passed the view, which is a combination of a filter and then a ranking module, strength, top to bottom. Anything above the index would be strong. And clearly the superstar of 2012, Bank of America. What a beautiful stock. He knows how it pulled back several times to the 200-day moving average had a kahuna, a number of pocket pivots, and ran to the races with no negative pocket pivots along the way. Everything is green, still moving up. And you could see its biggest challenge is at some point it's going to become extended. High jump bar pulls up, eventually it pulls back. High jump peak, it pulls back. Although it pulls back and goes sideways, we're going to get up to that point soon. But certainly has been a leader. I'm also a big fan of JP Morgan. It's been a little bit less pulled, extended. And you see the same thing when you get to the tops on the high jump bar, you pull back. Ian's magic millionaire indicator. And if he was a television marketer, he could be selling it with Ginsu knives and making millions because it is a great indicator. I'm obviously being a little facetious. Getting up to 2012 highs territory, which there might be some resistance there. Plus, we talked about the market. You see the strength in the group on this line. Again, the 8-day exponential, 17, 15, 200 simple, volume on the bottom. And these are those kahunas. Here's the Eureka, which is calculated NYA. All my momentum indicators are green. As long as the market does well, you could be doing well with these, and you might want to just look at something like the XLF and not have to pick out which one to buy. And you can see the XLF has really jumped out to some nice highs. I like buying these things on pullbacks. I don't like buying extended things, and so they're not for me. This is a pullback, okay? It's a deep pullback, but it pulled back to major support. What a great buying time. Here was a pullback. I like them when I get a signal, and the signal probably came in here with that pocket pivot. Here's another pullback, stopping on a dime on that 200-day moving average. So we'll see more pullbacks as we go through. Right-click, go back. Oil and gas exploration. Really saw a bunch of these, and some of these are dogs, or they've been dogs that are waking up. So something's going on with gas. Do people think that we're going to start being exporters? Is it the Chinese coming in and buying so their land is worth more? But what's moving these things? Now, first thing I see here's Chesapeake, downtrend. Look at a weekly downtrend. All right, I don't like buying downtrends. You probably don't like buying downtrends. Now, the settings so that I don't slow down when I look at my charts are limiting how much time. So if I really wanted to see the downtrend, I could go into a, and let's just see what I want to look at here. Just want a simple chart. The good news is we got some great stuff in HGSI. Bad news is we got a lot of it, which is a good thing. I'm just looking at a simple moving average chart, and you can now see what I mean but on a weekly, how this is, had major peak back in 08 and really been doing nothing, subtle downtrend for quite some time. I don't like to buy downtrends, but I'm kind of curious what's going on with this group and why it's so high on the force index. Where's my kitchen sink? All right, so notice everything turned green up here in momentum indicators. Sort of a flat line base here, had a kahuna come in, a little bit of volume, 12 million shares. Now, that's why this is up at the top, because it's got huge volume and it had a positive move. So maybe something's going on there. I don't like to buy a lot of things when they've got such strong moving averages sitting on top of them. Anadarko Petroleum, I like this one a lot more. Everything is green. Makes money, but not much earnings per share growth going out forward. Why do I like it more? Because it pulled back here that 50-day moving average, and I got my buy signal, pocket pivot, and some kahunas coming in, and it's off and running. This is very bullish looking for me compared to Chesapeake. Apache, like Chesapeake, underneath that 200-day moving average, and they have a tendency to stop and pull back under the 200-day. So I don't like to buy downtrends under the 200-day. Devon, again, so these are bottom fishing numbers, but I have to admit, pocket pivots, lots of kahunas, everything turning green. I guess I put these stocks on and watch them tightly. And if I want to get in, I'm going to get into something that's broken above the 200-day moving average. Well, Southwestern has, and you notice how the 50 was support. If it can get above that 50 and hold, this might be one of the attractive ones. That's enough of the group right now. But if I had to pick one, it's going to be APC because it's already done what I want, which is break above the 200 and hold, get above the 50, the 8 crossing the 17, pocket pivots, everything's green. If I wanted to pick one, that's the one that I like. Whoops, get my stuff back here. So I right-click, go back. Now I'm in the biotech space. I spend a lot of time here every week. Onyx, pullback extraordinaire. I like this one a lot. If this was a strong market, this is the kind of stock that I like to buy. Now, it's still red on the Bongo Weekly, although my the daily has turned green, as has my weekly substitute, which is a little quicker one there, but I'm going to shut that off for the rest of the day. Everything else is green. A pocket pivot on Friday, volume above the moving average, a kahuna. Pull back to a squeeze here with the 817 and the 50 and broke above with a very bullish candlestick. This is one that would go into my buy watch. Gilead, this is a darling right now, lower left, upper right, pull back to the 50, running again. Everything is green. Earnings coming back into the stock, earnings growth. Vertex, a pullback, it's below the 200-day moving average. No earnings, a little bit less exciting. Let me just point out a couple of these more before I go on. We talked about buying Regeneron on Sunday because it pulled back to that 50. Well, I'm telling you to buy Onyx because it, the 50 move, it's already running. But you can see what happens with these guys. As long as the market goes up, these pullbacks to the 50 have been working. One of our favorites in the group has been Pharmacyclics. Again, a pullback, running again. I think it's still attractive, not based upon earnings, based upon projections for a drug that's in the pipeline. And lastly here, I like to look at Celgene because it's one that I made a call on once and I still have a big holding. Remember this day? That's when I came on the board and I said to buy. What a beautiful setup that was. Sort of a little, sitting there like an island. Big, long-legged doji, huge gap down, gapped up the next day, and it's had a nice run ever since. You know, it's getting where it pulls back. But I got to tell you, I like the stock long term. They do have some big data coming, so that stock's going to be data driven. So still like biotech, and so does HGSI because it's number 3. Airlines, God, who knows what to do with them? You know, but look at the top 2, and which one do you own or which one do you want to buy? U.S. Airways, not great earnings per share growth coming. They're going to potentially merge with American Airlines, which will be good for the legacy carriers because they'll take seats out, push prices up, be bad for us frequent flyers. Everything is green there, coming out of a sort of a interesting saucer, breaking out here. Kahuna's big volume on Friday. I think I like Delta and Alaska better. Now Delta is, you know, it's had a big run already. It's $3 off of its 200. But look at the earnings per share coming into the stock. You know, like U.S. Air, I guess the absolute numbers are pulling back. Maybe we've missed the run in airlines, but they're up there. They look interesting. Pocket pivots galore. Alaska maybe is a little bit safer looking, although it's below the index. Pull back a little bit, sitting right above the 17-day. It's got good earnings per share growth still to come into the stock, multiple of 10, and it's growing at 40 and 30 in the next 2 quarters. Excuse me. Go back. Next group, computer, here's Seagate and Western Digital. Now, let's take a look at SanDisk. Everybody has a digital something, and you all got memory sticks in them. They make the memory sticks. Like Western Digital, like Seagate, these things don't get a big multiple consideration. This one gets 19.2. It's coming up off of descending moving averages, but with a number of pocket pivots. That's interesting to look at. I don't love it. I do have a holding in Seagate, which I got back into when it pulled back. You know, here's that lovely multiple of 4 with a dividend of 4.8%. Pull back to 200. The 200 is pointing upwards. A couple of pocket pivots. I think if computers and the economy pick up, Seagate does fine. And Western Digital usually shows up right next to Seagate. A little bit more risky, perhaps, than some of the ones I showed you previously. Back. Computer hardware index. So this is driven by Stratasys and 3D System, and then the discussions of divesting parts of HP and the discussion that Oracle might want to buy them. DDD, I don't know when it's gone too far, but take a look at that high jump bar. I need to see it digest some of this run-up before I put fresh money in there, but it makes money. It has earnings per share growth. It trades at a multiple that is pretty generous at 57, does not pay a dividend. Everything is green. This and Stratasys are incredible companies that you can give the specs, and they have a 3D copying machine that basically creates a 3D model. So if you're working on something architecturally, the automobile industry, in the energy world, they can actually, using various resins and chemicals, create a 3D model. Stratasys is the other company, and you could see lower left to upper right. And very nice charts, all green. I'm not sure if they need the earnings growth to support these prices, because right now they're the darlings of the market, but they are extended. HPQ, this is what we call garbage off the bottom. It's not for my money, although it did turn green, have pocket pivots and kahunas and some volumes. It takes a long time for buyouts to happen, and it's all news-driven, and the stock is in a downtrend. But 3D Systems and Stratasys have been what's been driving this index higher and higher. All right, we're at Internet retail. Yeah, you know, I saw this when I did my bottoms-up approach. There's a lot of interesting things going on in the Internet stocks and some things moving up off the bottom. Facebook, I mean, forget that this is called Facebook and that we have our own feelings. Couple of pocket pivots, 3 kahunas in a row, everything is green, earnings per share growth in the stock, that's a buy. And if this wasn't Facebook, this is breaking out. If it trades above where it closed, and it's going to run, I've got a position in this. I think this is still one for the long haul because there's a lot of mobile stuff for all their concerns. Amazon, yeah, it's a big gorilla, been around for a long time. Here's where you want to buy these things. This is what I want. I want pullbacks that bounce off. So here's a buy signal to me where it bounced off the 200 and had a pocket pivot, and it would have been a great time to get into the stock. Could have gotten into it back here off the 50, but this was the alert right here. Anything else here to look at? Price line, you know, if this market rolls over, this is when I probably think about buying puts on. It failed at the 200-day moving average, and frankly, it's been failing at the 200-day moving average since September. And if this market rolls over, this is one that I think rolls with it. I mean, are we going to have a head and shoulders? Then it breaks this neckline, maybe. But this is one that I'm not buying right now. I'm not shorting it right now either, but it's one that's on my list of shorts. It's very expensive, has a long way to fall. And if we have a deep pullback in the market, this is the kind of thing that can give me a nice little quick pop. So it's still a bullish stock, I guess, as long as the market is holding up. But you know what? If the market opens up big down tomorrow, and I get the feeling, I see volatility coming in, and I want to find some shorts, I know where I put my stop. And You know, if it opens up and then it sells off during the day, the market, I like shorting things close to that 200-day moving average. Now, you know from prior calls, I don't really short, I buy puts. All right, but at the end of the day, they're the same. Asset management custody banks, this is a real big mixture of things, but you probably want to look at a couple of them. And I'm going to look at, let's see, we'll look at the top couple. So this is NationStar Mortgage. There's three companies, NationStar Mortgage, NSM, OCM, which is OM, and WAC, which is Walters Asset Management Company. The three of them have been buying up, beaten up, high-risk mortgage securities and servicing them, closing them out, working them, buying them for a song, and making a ton of money. So here's a stock that trades at a multiple of 19, has earnings per share growth coming in of 100% next quarter, 20% the following quarter. Pullback, took off on Friday with a pocket pivot. Now, the weekly bongo is still red. The one that I use a little bit shorter parameters has turned green, as well as the daily. I want to be in one of those three. Now, NationStar doesn't pay a dividend, so just to put them up here real quick. Some of you are probably already in this one. We've talked about it on these calls a lot. What a beautiful run-up. It's now based for a month, 2 months. Had a pocket pivot Friday with the squeeze. Huge volume coming in. No dividend yield. But one that, if you look at MarketSmith, or you look at anything that looks out a couple of quarters, huge earnings per share is coming in, and you could see it here. So what does this mean to me? It means that it had a 25 and a 24. That's, we'll call that 50 cents among friends. It's got an 81 and a 51. We're going to call that $1.30 among friends. $1.30 minus 50 is 80 cents. If the multiple stays at 30, 80 cents times 30 is 24 bucks. Adding 80 cents to the earnings and keeping the multiple the same is going to give a lot of gas in the tank for this stock to run out and take out some old highs. The con here is it's still a relatively young company. It's in a high-risk industry. And, you know, Bank of America is going to sell some securities. The three of these companies are trying to buy them. If one of them wins and the other two lose, the losers will probably get hit. If they all get a piece, it's probably good for all three. The other one is Walters. And you can see the same thing, pullback, pocket pivot off the 50-day moving average, monster volume, great earnings per share growth coming in. I think you owe it to yourself to consider one of these. If the market tanks, these probably tank with them, but at least these are stocks that are not extended and are basing. Anything else in the list that stood out? Here's another one. This one has been sort of beaten up for a while, Blackstone Group, but they're starting to unlock value. And when I see a series of positive kahunas, a ton of pocket pivots, everything is green, makes money, I start to get interested. And I also see that where they were here, it's huge revenue, got clobbered. Now they're starting to pop back up with big revenues. Some of that's property sales. I'm very interested in this group. I actually own this one. Pays a small dividend. It used to be a lot higher dividend before the stock just had a nice run-up. So, Alliance Capital Management, that's what I was looking for. Pull back to the 50, pocket pivot running. So we've missed it, but it's only up $1.50. Great earnings per share coming into the stock, pays a 7.7% dividend yield. Let me say that again, 7.7 dividend yield, multiple of 20, and great earnings per share coming into the stock. The entire category of asset managers looks very strong. We're already going longer than I planned, but I'm going to keep going for a few more minutes. Oil and gas drillers, I saw a lot of them on my look-see today. I think these are being driven by rig settlement, and you might see some things happening here. Look at the earnings per share opportunity coming here. Rig had already put away the money to pay for the settlement. Some is a little bit less than expected. Multiple of 18, doesn't pay a dividend. Everything turned green. Pocket pivots this week. This thing probably takes off with the settlement. It's been a big stock in the past. Another one that looked interesting, well, all these things looked interesting. And again, something's happening. They've moved up to a nice position. Atwood's one that's been bouncing around here, but turned green, got above the 50. A lot of the things in this group looked interesting to me. And then quickly at home builders, take your darts out and throw it and take your favorite one or two, because I think this could be another good year for home builders. You could see flat until June, big run up since then. This is the index. Let me do this differently. Forgot to right click and change to the stocks, but it wasn't too bad with what the index is. So I actually own number 2 and number 3. Pulte, I own Pulte and, can't remember which ones I own, Pulte and Lennar right now. So pull back to the 50, running again, pocket pivots, everything is green. Feast your eyes on the earnings per share, no dividends. Trade at multiples high, but low compared to growth rates. Pulte looks like it's running again. The whole group looks the same. Here's D.H. Horton, deeper pullback, moving up again, good earnings per share growth. Here's Lennar, steady Eddie, tight, lower left, upper right, all green, great earnings per share growth. You can go on and on. Toll Brothers had also pulled back. Looks like it's running again as well, great earnings per share growth. What's on the downside from a group perspective? After last week, it's hard to believe we'll see anything. All right, so gold, not a big surprise. Minerals. Semiconductors have been up and down. Nothing there I want to take a look at. Here's one that was a darling that's no longer anybody's darling. Mellanox. Used to jump on earnings dates. And then it warns, it misses, and it's gone. Boy, nice stock, broken stock. All right, so now let's leave this part and let's do a quick thing that I like to do. I did my group inclusion filter, and the group inclusion filter you can learn about in other webinars. Here were the results. And so these are the stocks that showed up on so many of the lists. Now, we've seen some of these already that were in the big groups, but what I'd like to do is just quickly go through the top 10 and then probably say good night. So for those who have no idea what I'm talking about, you can take any group, set of groups, and I'm going to do it for you real quick because I think it's that important. I'm going to go into Tools, Group Inclusion Report, and I'm going to highlight, here I had checked off the different groups that I like to look at. These are the groups that I have put together for the week. And then I ran an analysis, and the analysis was to tell me if any of these stocks show up on a list, they get a point. If you show up on 2 lists, you get 2 points. And then rank the stocks by how many of my very bullish lists they show up on. And then I get a sheet which shows me which lists and how many lists. Here's that 3D systems I talked about. IBD 50, Cancel and Select, Marcus Smith 250 Growth, Small Craft Leaders, bolting relative strength, top 150 EPS relative strength, daily and weekly bongos, top bongo stock, top vector best stock. This is a very loved stock. Question is it been loved too long and needs to get a little unloved? I then can dump these in the same order into a watch list. And I call that watch list tonight top 30s. Let's go into scorecard no index, which takes as balanced fundamentals and technicals, and let's take a look at a couple stocks and see if there's anything here that we like. SodaStream, I commented on it earlier in the week. Beautiful looking chart pattern, lots of pocket pivots after a Bible gap up on Monday into, this would be Wednesday, Thursday to Wednesday. It makes money, trades at a multiple lower than its growth rate. I just don't get why I want to make soda in my house, so I don't understand the company. It's young, growing, growth stock, taking off, breaking out. 3D Systems was, you can see this nice run-up that we saw about before. Is it time to pause to refresh? I think so. Probably means sideways, let the 17 catch up, and then I bet it bounces off and it runs. United Rentals. This is a stock that made an acquisition in the last year, and they pulled back, ran up, pulled back to the 50 weekly, have been skating up, it looks like on a weekly chart, running again. Positively mentioned last week in Wall Street or Barron's as a, and then on CNBC, as a sector, this and HGES, of potential long-term plays. You look at a lot of construction sites, you'll see United Rentals on their equipment. On Assignment, breaking out, is a temporary personnel company. Take a look at HLF if you want to see what those, not Herbalife, Robert Half International, it's RHI. Eagle Materials, we talk about this on every meeting, and if you've been watching me for 6 months, and you would have bought this 6 months ago. Lower left, upper right, tight as can be, growth stock, great earnings per share growth, makes cement, multiple a quarter of its growth, pays a dinky little dividend, remains an attractive stock, but it's now extended. Wait for it to come back. Try and buy this guy off of the 50-day moving average. Avis running as is Hertz. Don't know much about him. Don't like its earnings pattern. Skip. Pulte we looked at as a builder. Seagate I talked about pulling back, running. I own some. Its earnings per share growth is stopping, but how much growth do they expect with a multiple of 4 and a 4.8% dividend? Lithia Motors, if the car industry does well, somebody's got to sell them. This is one of several publicly traded automobile retailers that I like a lot. It's just a little bit expensive. You see the high jump here, and every time it hits, it goes sideways or pulls back, so too extended for my taste. Stratasys is the other company like DDD, 3D printing, will be leaders. Whether it gets pullbacks and digests before then, we'll see. A lot of chemical names made the list. Here's Eastman Chemical. Hit a nice run. High jump, not quite at the top, but getting to a tough place. It's got earnings per share coming in the stock, trades at a teeny multiple of 14, has a teeny dividend of 1.7. So it's just the way each one of these is a viable or an interesting stock. MDC Holdings, one of the home builders, pulled back, trying to run again, awesome earnings per share growth. Here's another of those retail. So point of this is, all you got to do is go into Designer. Jeff, I've only got 15 minutes. You're a freak of nature if you like looking at 800 charts or 300 charts. Okay, I am. Tools, Group Inclusion Report. Find the smart groups, which are some groups that are preset for you, and check off the ones that you like. Make group from report, put a name on the group, how many do you want, hit OK, and you can get a list that looks just like the list I did, and then spend 15 minutes and go to sleep. Lastly, let's take a quick look if there's anything else left out here on my PowerPoint that I want to cover. I think I'll leave the rest for another day. So Good night, everybody. It took an hour. I apologize. I wanted to do it short, but I'm excited to be here, and it's an exciting market. I just think that it's a market that, I don't know if it's this bearish, but we probably are at a point where we need a correction. So this comes from Roger Prechter, one of the extraordinary Elliott Wave interpreters, and this month's issue, the biggest top in centuries, Dow is poised to drop over 10,000 points in the next 3.5 years. God only knows. The Mayans weren't right. Maybe he won't be right. I hope he's not right. Smart man. You got to be prepared, and you got to know what to do with your portfolio if the market goes against you. Last second look at the futures. You know, they are deserving a pullback. They're not pulling back very hard, just a little bit. Good night, everybody. Have a safe week and a good week trading, and we'll be back with you next week. Good night.